The implications are broad, but exposure to Russia may not be a major headwind for the semiconductor industry. Christina Partsinevelos joins us now to explain. Good morning.
Good morning. So we know Russia accounts for less than 0.1% of global semiconductor sales. That's pretty much $500 million, a drop in the bucket when compared to the current $550 billion semiconductor market. Russia relies on imports from companies like Taiwan Semiconductor Manufacturing, which actually has begun halting deliveries to Russia. And no major chip giant is headquartered in either Ukraine or Russia. Of course, supply constraints are very worrisome for many chip makers like AMD, Nvidia, and Intel because Russia is a major supplier of palladium that's used to make electronic chips, and roughly 33% of global production comes from Russian mines. And prices actually just hit a 7-month high just yesterday. And then you also another element too. You've got 90% of US grade neon, which is critical for lasers used in chips, and that comes from Ukraine. JP Morgan points out that Intel gets roughly 50% of its neon from Eastern Europe. The stock has been getting hit over the past 6 months. We'll bring that up on your screen in just a moment. However, neon is considered to be a tiny fraction of the cost structure. And now for the potential positive long-term upside that Andrew spoke about for semiconductor equipment makers like Lam Research and Applied Materials. Recent turmoil reinforces the commitment of the United States to regionalize supply chains amid growing geopolitical uncertainty. We know the president spoke about that recently in his State of the Union address, and that's a gain or a momentum that is likely to continue. Guys?
Christina, how much should we be actually focused on this versus, and it's what the Colonel was talking about before, we talk about it almost every day, what this really means for Taiwan later?
Excellent question, which I'm hoping to address next week with Taiwan. I don't think we are addressing how bad it could be, and this was exemplified by Taiwan Semiconductor stock just over the last little while. You had investors that reacted and thought, okay, this could exactly happen, a replica scenario with China and Taiwan, which is why they started selling it off. And Taiwan is a huge, huge provider of a lot of semiconductor parts as well as equipment. And so you saw the reaction over there. I don't think it's something we're talking enough about. And I think that, is this priced in? Maybe not, just based off of what we're seeing with the reaction for a lot of these other major companies just over the course of the past month. But Taiwan Semiconductors is an example of a major sell-off once February 24th happened and the invasion started.